I think hope is finally on the horizon, with the Reserve Bank opening the door to a February rate cut as Governor Michele Bullock reveals she has more confidence inflation is falling. The board kept interest rates on hold at 4.35% yesterday, but there's now fresh hope we could see a cut much sooner than previous expectations of May. Joining me now is Director of Data Insights at CanStar, Sally Tyndall. Good morning to you.
Morning.
OK, we all heard the headline, no rate cut yesterday. What's the story behind the story here?
OK, so we have been analysing their every word, written and verbal, for the last 2.5 years. I think for a while there we were analysing eyebrow raisers, right?
Yeah.
There was a significant shift in language yesterday. The board has made the decision not rule anything in or out. I know that's a double negative. It's a tongue twister and a mind twister in one. But that means rate hikes are totally off the table at this point in time. Instead of being vigilant to upside risks, they're now just alert to upside risks. I know it sounds small, but it's important. And then she did not reiterate the statement she'd been saying for a while, which was that cuts in the near term were unlikely. She didn't say that. In fact, she went as far as to say she didn't know whether the board was going to cut the cash rate in February, which means it's a live option. They didn't consider a case for a cut at yesterday's meeting, but I think they will in February. I don't know that we'll actually see a cut in February, however.
OK, so the next board meetings, we've got mid-February, 1st of April, 20th of May. They're the ones in the mix.
They're the next three, yeah.
What are we looking at, do you think? OK,
I think that they'll consider it in February but rule it out. I think April is absolutely a live option, as is May. It will depend on not just inflation, but also the jobs data, because the RBA has this dual mandate. They've got to keep prices in check, but they've got to keep people employed. Right now, unemployment is sitting at 4.1%. That is astonishing, considering the rate pressure we are under. But if it starts going up and higher than they forecast, we will see a cut, and we could see one as early as February if that happens.
Yeah, still amazingly low. So Aussies are going to have to survive the next few months, actually more probably, because it takes a while for cuts to sink in, doesn't it, on this rate? What do you do if you're struggling? OK,
so do you have a mortgage? Yes, then is your rate under 6.3% as an owner-occupier? If it's not, if it's higher than that, go out there, refinance, go out there, haggle with your bank. There are 36 lenders on the CanStar database that are offering at least one variable rate under 6%. Most of them are for owner-occupiers. Why not have a look at refinancing to one of those people? But do not stop there. You take a half a day off work, or take a half a day from the beach or whatever you're doing, and you negotiate your electricity, your gas, your phone, your internet, your insurances, even your food bill. Work out how to bring that down. A $600,000 mortgage, 25 years remaining. If you go from a very complacent rate of 7.11 all the way down to that under 6% rate, you could lower your monthly repayments by up to $421. If you kept going with your other bills, you could inject well over $500 every single month back into your budget.
$400 to $500 a month. You just need to do a bit of work, but look how much you could save. Sally, thank you very much.